So the Reserve Bank confounded the experts and wrong-footed the pundits and left rates on hold. It's also warning homeowners not to take any future cuts for granted. Here's Philip Lasker.
It was the announcement that had the experts gasping.
Unchanged.
The Reserve Bank kept the official cash rate at 4.25%, citing some progress on stability in Europe, an improvement in the US and an Australian economy growing close to average.
They really were keeping their powder dry for events that might happen this year. They still think that there's a fair bit of risk out there, and indeed they've described the risks to the global outlook as to the downside.
Like the risk of a European-inspired financial meltdown. But for now, the board said the current level of interest rates or monetary policy was appropriate, and it added that the contained inflation outlook provided scope to cut rates in the future should conditions weaken materially.
The use of the word materially is significant. It does suggest that the activity picture has to be much weaker to push them lower and to lower rates further. I guess if we had to pick one single indicator, that would be the unemployment rate.
So the war between the banks and the government over funding and interest rates has been postponed.
The Reserve Bank has struck a balance between global uncertainty on the one hand and Australia's strong economic fundamentals on the other.
But balance is in the eye of the beholder.
What we fear now is that we will see even tougher times and potentially job loss.
The clear message from the Reserve Bank is that the economy is fragile.
And analysts haven't abandoned their rate cut forecasts.
It will to some degree offset what is a tightening in monetary conditions by a currency that continues to move higher and by what is pretty tight setting of fiscal policy as well.
The banks are telling us that these days the RBA rate move has less bearing on their variable home mortgage rate. The ANZ gets the chance to prove that point on Friday when it sets its rate independently. And one thing's for certain, it won't be going down.